Earnings per share is a common metric investors use to understand how much profit a company generates for each share of its stock. You will often see this abbreviated as EPS. It is a fundamental building block for evaluating corporate profitability. The math is straightforward. You take the total net income and divide it by the total number of shares held by investors. EPS helps you see if a company is becoming more efficient at generating profit for its owners over time. Companies often report two versions. Diluted EPS is more conservative because it accounts for potential shares from stock options or convertible bonds. Investors look for consistent growth in earnings per share. A rising trend often suggests the business is performing well. Remember that a single number doesn't tell the whole story. Always look at the full financial picture before drawing conclusions. Thanks for joining us. Check back for more basics on how to read financial reports. Educational content, not financial advice.